Okay, hello everyone. This has been my biggest trading week of the year so far, so I want to break down the positions that I found throughout this week, how I executed them, and where my actual positions were. Now, these are all trades that I'm going to show you that were sent through in the private classes to my students. Okay, so I send these out to my main group, and I'm going to show you how we actually managed to execute them and how we found these setups. So the first thing I look at when I'm doing analysis is the US dollar index. Now this is a chart that measures the strength of the US dollar against pretty much every other currency. Now it's heavily weighted against the euro, but it does help us to understand the overall US dollar direction. And with the US dollar being pretty much, well, central focus in everything that I trade, I obviously want to understand what I think the US dollar is going to do. So at the start of this week in the narrative video, I saw and showed everyone that because we had basically started to sweep under this low in towards a demand zone, that I would then be anticipating a continuation to the upside to take out that high. Now, how do I come to this conclusion? Well, number one, the first consideration this week is macroeconomics. So what we have is Iran and US tensions, okay? So there's pretty much war going on in Iran between the US, Israel's involved as well, but essentially what this does is create uncertainty globally on a political and economic scale. Now, uncertainty will drive money out of risk-on assets and into risk-off assets. So a risk-on asset is something that in kind of pretty optimistic times will perform better. Risk-off is when people take risk off the table and money will go into the safer assets. Now, the US dollar is the world reserve currency and it's seen as the biggest safe haven currency. So when we start to see uncertainty taking place anywhere in the world, money inflows into the US dollar, which is why we get these aggressive rallies like what we've seen. So that was driving my bias on the US dollar to be pushed to the upside. And then when we look at this 4-hour technical structure as well, we've got basically the market sweeping through a high. So this high here was swept through, which is just back there. This is a point where I could say we may be looking for reversals because just a week ago, I was looking for the market to do this. But because of the macros and because of the fact that we understand there is strength behind the US dollar from a, bigger economic picture, then we need to consider the possibility that this could go to the upside. So then when we look at the technicals, we see after creating that first high, we then created a second equal high. Now, equal highs, which a lot of traders will see as a resistance, have what we call liquidity above them. So in and around this region, we will have lots of stop loss orders for anyone selling under the high. Those stop loss orders for sell trades are essentially buy positions. They are orders to say, I will buy my positions back for more than I paid for. So there's a lot of buy liquidity in there, right? Now, as well as that, we also have got buy stops. So breakout traders looking to buy if the level is crossed. So all of this liquidity basically creates a point in the market that acts like a magnet. So when we see liquidity like this, we can anticipate it's quite likely the market will be magnetized towards that level. Okay, so equal highs, drawing the market in. Now remember this analysis we did was back here. So it was there, right? So we have equal highs drawing the market towards this point. And then we also have the macro backing of expecting a stronger US dollar based on the macroeconomics. Now then, we saw a sweep underneath the low of the range, which was this level here. And as soon as we swept through that, we traded straight into a demand zone. So we sweep through a low, fill imbalance, hit demand, start to rally, show that structural shift that I showed just there. And then from there, we were expecting and anticipating buys to the upside like that. Now, what does this actually set us up with in the grand scheme of things? Well, it sets us up with US dollar buys and everything ex-USD, so GBP USD, EURUSD, sells, because we expect to see weakness against the dollar, meaning dollar pair should appreciate, and ex-USD or versus dollar pair should depreciate, okay? So that's why I use the dollar index, because that allows me to understand that overall idea and narrative that I'm going to be looking for that week. Now, as you can see, what I said and what I planned and what I shared worked perfectly, and that set up the trades that I'm about to show you. So the first one is EURUSD. At the start of the week, I said, if the market is able to get over this high, and then we shift with a bearish confirmation, we can then look to sell down towards the swing low. So if we go over to EURUSD, this one here, from an hourly perspective, here's the high we were looking for to be swept. We saw the market sweep over this high, and we came in at this point just here. Now, some traders, again, will see this as a closure to then buy into, but remember what we just said about liquidity. Now, this is what we call range liquidity. So essentially, we classify this is our high in this downward move. So any selling that's taken place at any of these highs, we know there's going to be a lot of stop losses above this level. So that creates that buy liquidity. We also know when the market breaks above, we're going to see more buy liquidity in the form of buy stop orders and manual buys as people expect to see a breakout and continuation higher. Now, all of this buying that takes place at these levels creates a perfect position for absorption of the buy orders and significant selling orders to be injected into the market. So what actually happened at this point was we crossed over and loads of buying kicked into the market, but then even more selling came in, absorbed all of those buy orders, selling to the buyers in such a large quantity that the market actually drives straight into a reversal to follow our bigger picture bias, which is, of course, stronger US dollar. If the dollar is getting stronger, the euro is going to get weaker against the dollar, so EURUSD should go down. So the trade that I actually managed to pull from this one, because I was quite high conviction about the reversals, given the state of the US dollar macros, was once we had broken through this structure. Now, this was a rather aggressive take because on the 4 hour, we only just had these wicks. So this was an aggressive one, I will give you that. The safer opportunity would have been from inside of essentially this range. Now, I'll show you in a moment that a few people that I shared this trade with took the positions from there, which is very nice to see. But I was quite high conviction on this reversal and continuation lower, so I did take the more aggressive hourly setup. Now, this was super simple. It was structural high, higher low, higher high, lower low here on the hourly and below. So the hourly, 30-minute, 15-minute, all of these show this. And then pull back through imbalance to supply, sell supply, stop over the high, and trade it down towards our target. Now, our target for this one, how we formulated this, was basically just the next notable swing low. So if we look at where the structure has been, we have been overall trading in an upward trend. So from a daily perspective, the way that I'd been viewing this until very recently was we have an impulse, we have a high, we have a higher low, higher high, higher low. This is not really a viable higher high at this point from the weekly perspective, but it did get some closures on the daily and below. So we classify this in this case for a higher high. Then we have a higher low and a higher high. So all the way through this downward trending move, I was primarily focused on looking for buying opportunities where they came through. But when we saw the dramatic dollar strength that came in over the past 2 weeks because of the macroeconomics, we basically leaned towards a situation where we said, and I covered this in the video I shared with the students, that the likelihood of the US dollar going higher means basically this is the highest probable point for the market to sink a lot on EURUSD, right? Because if we are seeing considerable dollar strength, then even if we want the euro to continue in its daily uptrend, it may not. So I just used the swing low, basically breaking this would shift us into bearish territory, which we're now moving into. That was the target. The reason I didn't target anywhere higher up is because, first of all, the demand zone here, this was already taken out by that low there, okay, and that's prior to taking the trade. And then under that, the demand zone here was hit already. So this is what we call efficient demand. So that's useless to us. It's not going to cap price, at which point the next logical place to put a target would be the swing low. So that is that trade. Very simple stuff. It literally this week was, okay, we failed at here. We failed this demand. We've started to move lower. We understand from a macro perspective, we are considerably likely to move lower than higher at this point in time. We don't know that 100% for certain yet. So what we'll do is wait for conformational structure in there, which is the movement that we executed off. Okay, so that's this. And then we just say if the market sweeps above the swing high, and then it does give us the reversal, then we take the trade. So a lot of my trading, all of my trading, is in this if this then that format. Okay, I prep ideas and say if this happens, then I will take this action. If this doesn't happen, then I will not take this action. And if this other thing happens, then I will take this other action. Okay, this is how I trade. So I just set that up and then I just allow those to come through. Now this one did of course come through, and that was, there you go. Very, very, very simple trade, nailed that. And yeah, that one's EURUSD. GBP USD, later one for me, to be honest. I got into this one more recently, and this one was ready more recently as well. So this one was kind of just a straight 4-hour trade. I did use the hourly, which I'll show you in a moment. But as you can imagine, we're basically looking at the same exact thing for GBP USD as we looked for on Euro, okay? So this one is actually trading higher in its kind of daily leg. So from the daily perspective, we have the high, higher low, higher high, higher low. Basically, we've just traded to the upside. We came through with kind of a big sweep here, but we've been trading in this upward trending fashion for some time. Now, what we've actually done from there this week is we printed this not too strong low, and this also came from pretty much what I call no man's land. So there was no clear demand zone for us in that level. Now this runs us through towards that area of demand down there, which is the overall target. And then, yeah, I'll draw that on with a proper line. So basically coming into around this point, yeah, so we had this kind of weak low. We saw the market drive higher. We understand that the dollar is kind of in control at this point in time. Remember back to, of course, the dollar formation as well. We had that very short term, strong expectation of the dollar going higher. So what we saw here was the market swept over this kind of high. We traded through a small gap, and then we hit what I classify as a supply zone just before the gap. So a gap can be treated kind of as imbalance. It's very high probability that gaps are filled. And if gaps are filled and then reversals form straight out of the gap fill, that is a very high probability trade. I made a video on this a bit ago. So yeah, if you want to go look for it on my channel, Trading Gaps, you'll find it somewhere. So basically, we filled the imbalance, filled the gap, hit the area of supply, and then we started to shift down. Now, this one was slower to move. So I was more cautious. And another thing about me as well is I only like to take one trade at a time on, say, EURUSD or GBP USD most of the time. So I don't want to stack both of them because it's basically one position against the US dollar. So I'll usually choose the one that looks the best and then look for the execution on the other when it becomes really, really clear. Now, if there's two super clear trades, I will take them both, but that's usually not the case. Usually one is better than the other. And I'd rather take one and risk 1% than stack risk and end up losing both, okay? So that's just me. Obviously, you don't have to do that, but I opted to take EURUSD initially. GBP USD was slower to go, so I didn't execute this one off of that first push. Obviously, as we see, 4-hour didn't give us a strong closure. The hourly on this one as well didn't give us as good of a closure as Euro did. It did still close, so you could have sold it in the ideal world with the benefit of hindsight, of course. You could have sold it from there. That would have been a very, very big trade. But I didn't. So there you go. That's that. And what we actually did instead was I waited for the market to start really shifting down. And when we had these two bearish candles here that drove us into the imbalanced range and basically confirmed that we were moving to the correct direction, the downside, then I just used this area of supply. So this doji candle here, placed an order there and put a stop over the wick just before it. Now, if we look at the hourly on this one, it pretty much told us that that was the right point to sell from. I could have sold it from there, again in an ideal world with the benefit of hindsight, but I preferred to just work with the 4-hour, make sure I actually get the trade. And then stop loss, why is the stop loss there? Well, realistically, again, it could have been there in an ideal world with the benefit of hindsight, but I'm a boring, conservative old man trader, okay? So I actually like to be conservative with the trades and be safe with them. I just put it over this wick in case we did end up coming up. And the risk reward on this one's solid anyway. So I was very happy to just take the trade like that, okay? So there's the position for GBP USD, not as big. It's also not done yet. The overall target, as I just showed you, was kind of that 4-hour and daily demand. At the moment, it's trading at the swing low. There is every chance that this one will do that. I don't think it will, so I'm going to just hold it. I'll probably close it soon because I close trades before the weekend anyway, but I'm going to give it a little bit of time to see if it will get down there. This is, yeah, right now about 3R, which is very good. That's about the minimum I'll take on a trade, but I'm very happy to take 3R very often. So I could close this now, but honestly, I am going to let it go a little bit more. No risk on this trade now. Stop loss is moved into profit, so there's no way to lose on this. It can either go straight to the target, lock in another 3.9, or I'll close at some point soon if it starts to reverse to the upside for probably 2.5, something like that. But that's that one. Very simple trade again. The last one, the easiest trade in the entire universe, was USD JPY. Now, if you trade USD JPY and you didn't get this trade this week, then I've got news for you. You need to do some studying. So this was a really simple trade, very similar to one that I covered the week before as well. So here's what I covered for USD JPY. I want to show you this because this is super useful for you in your trading as well. Basically, I was looking for a pull down under these lows into this demand and then a trade higher, right? If we look at what happened, we came under these lows into this demand and then traded higher, okay? Now, just to show you I'm not making all this up, these are, of course, posted 4 days ago, the majority of them, so start of week, and then the only other one, so with the dollar update and the UJ update, these were posted 2 days ago as well. So these are all posted before these trades played out, all right, just to show you that, so you know that I'm not, magic and anything. These videos were up before these movements occurred. I posted this 4 days ago, and then just after 4 days ago, we started to create this. Well, 4 days ago, just after I made it, we started to actually get these movements. So how did we formulate this idea then? Well, we did that by basically, I'm going to zoom out on this one. The market, after breaking out of this range, so I looked at this entire range really because we were just consolidating at this point. We didn't have any clear direction in here. I saw that there's liquidity down here at the low, so this range liquidity really has to go at some point. But we also have got very large daily equal highs. I won't even bother showing you, but you'll go and find them on your chart. If you go to the daily time frame, mark this high across to the left, there is daily equal highs there. And I was very much anticipating the market to come and take out these daily equal highs before potentially moving down to get this liquidity, or potentially just moving even higher for a while. But given that I was expecting the market to take that level, and we'd broken out to the upside and we were showing a clear upward trend, for me, it was just a simple trend continuation. Now you'll see I've got this marked on as well. This was a trade. I don't have the video up, so I won't waste any time on it, but you can just trust me on this one. I shared this trade the week previous. So the idea was to buy once we swept equal lows, filled imbalance, hit demand. We were then going to buy it to take it up towards these highs again. Now you'll see basically what we've got there is a demand zone. We impulse, we create these equal lows, then we impulse again. So we create kind of another demand zone. So this is this move, right? There's the demand, impulse, equal lows, demand, impulse, right? So that's the movement we've got there. This with the equal lows becomes liquidity or inducement. I call this inducement. I think I made a video in the bootcamp on this very recently if you want to go watch that. Obviously, if you're in the program, you're already understanding it. And then I expected the market to come through the inducement into the 4-hour demand and trade higher, right? So that was the trade that was shared with everyone and then taken here. Now, what we've seen if we take a look at the new piece of price action is, again, demand zone, push up, create equal lows, drive higher. This is inducement, new demand. Come down through the inducement and new demand, through the equal lows, and trade into the lower demand zone and drive higher. So it is this movement, again, just a little bit more compressed because the imbalance we have here is a lot smaller than the imbalance we had here. Now, just to show you there is indeed imbalance, because this is a sneaky one. There it is. We have demand zone, so this doji candle, impulse, then we have 1, 2, 3 relative equal lows, 2 perfect equal lows, tiny bit of imbalance between them. But this is, again, a magnet for price, okay? So I was looking at this demand to be filled. I knew that people would be drawn in, induced into the market at this level. They would take a trade, they would lose, and then it would come through to about where stop losses for these traders would be, and that would trigger in our buys, and we would win, okay? So that is how we found the trade, but very simple trade there when you understand how to see that. And UJ at the moment, I mean, I'm not banking on it happening again now that we've swept liquidity. So I wouldn't just say, try and do the same thing again. But these past two, absolutely perfect. Literally the same pattern. Demand, induce, pull back through inducement, retest demand. Demand, induce, pull back through inducement, retest demand. That is a very nice 2-week flow of trades on UJ. So this was the first big winner. And then the other ones have come through as well since then. So those are the trades, okay? So those are the trades I took this week. Everything perfect. No losses this week. Very nice stuff. It's good. Yeah, so real good bit of trading. Very enjoyable. Very nice to have big weeks like this. Now to show you, It's not just me getting these trades, okay? This is someone in the community. There's the GBP USD trade, bigger trade than me, so congrats on that one. EURUSD as well, same exact trade as me, a little bit of a later entry, but again, really good risk reward on that one too. UJ, the buys, okay, this one, late entry, bigger risk reward than me with a late entry. You know, this is how much of a conservative, boring trader I am. I like my smaller risk rewards. I mean, 3, 4, 5 is still not small, but I just like keeping it simple. But a lot of people in the group end up crushing it more than me because they have the bigger risk rewards and stuff. So I don't mind. Congrats on that. Very good stuff. This one here. So 8R on the GU short and 6R on the UJ long. See, everyone is outperforming me, but it's fine. These ideas, of course, are very useful to everyone, you know. So everyone's trades slightly different to a degree because everyone has their own way of trading. And of course, they're learning a skill set. They're not just copying signals. So I layer those narratives out and then people catch those trades based off of that. There they are. 8R, 6R, very good stuff. Here we got GBP USD. Again, this is where I said, yeah, same entry as me actually. 7R, again, bigger risk reward. Always getting outplayed, but we're okay with it. Another one here. This is EURUSD shorts right from the top. Very good stuff on that one. More aggressive. A bit more aggressive than I would take, but still locked in. Very good stuff. And then USD JPY longs here. This is a trader who, if you're on my email list, I shared this a week ago, got like a almost $3,000 payout. And then the next week has now made $5,500 on USD JPY following that exact same trade that I got as well. So you can see the value in this. All right. So yeah, that's pretty much how it goes. Just showing you that there's another one, GBP USD from another trader as well. Short straight down to the target. So you can see it's not just me, it's beneficial to everyone. Now, if you do want to learn how to do this stuff, I teach this system and then I share these narrative videos, the ones you've just seen, you know, these. I share those every week, usually 2 to 3 a week. And I do that, yeah, in my Discord. No, not my Discord, I don't have Discord. In a school, in my program DTM. There's a link in the description if you're interested in it at all. Anyway, it can help you to become a better trader. It's your call. Hopefully this has been valuable to you in some way. Thank you for watching. And yeah, I'll see you next week with a episode of the bootcamp if you're watching on YouTube. And I'll see you sooner if you're over in the program. So thanks. See you later.